A level EDEXCEL business paper 2. Capital. Answer. The money provided by the owners in a business. Capital expenditure. Answer. Spending on business resources that can be used repeatedly over a period of time. Internal finance. Answer. Money generated by the business or its current owners. Retained profit. Answer. Profit after tax that is plowed back into the business. Revenue expenditure. Answer. Spending on business resources that have already been consumed or will be very shortly. Sale and leaseback. Answer. The practice of selling assets, such as property or machinery, and leasing them back from the buyer. Authorized share capital. Answer. The maximum amount that can be legally raised. Bank overdraft. Answer. An agreement between a business and a bank that means a business can spend more money than it has in its account going overdrawn. The overdraft limit is agreed, and interest is only charged when the business goes overdrawn. Capital gain. Answer. The profit made from selling a share for more than it was bought. Crowdfunding. Answer. Where a large number of individuals invest in a business or project on the internet, avoiding the use of a bank. Debenture. Answer. A long-term loan to a business. Equities. Answer. Another name for an ordinary share. External finance. Answer. Money raised from outside the business. Issued share capital. Answer. Amount of current share capital arising from the sale of shares. Lease. Answer. A contract to acquire the use of resources such as property or equipment. Peer-to-peer lending. P2PL. Answer. Where individuals lend to other individuals without prior knowledge of them on the internet. Permanent capital. Answer. Share capital that is never repaid by the company. 1/2. Secured loans. Answer. A loan where the lender requires security, such as property, to provide protection in case the borrower defaults. Share capital. Answer. Money introduced into the business through the sale of shares. Unsecured loans. Answer. Where the lender has no protection if the borrower fails to repay the money owed. Venture capitalism. Answer. Providers of funds for small or medium-sized companies that may be considered too risky for other investors. Collateral. Answer. An asset that might be sold to pay a lender when a loan cannot be repaid. Incorporated business. Answer. A business model in which the business and the owners have separate legal identities. Limited liability. Answer. A legal status that means shareholders can only lose the original amount they invested in a business. Long-term finance. Answer. Money borrowed for more than 1 year. Rights issue. Answer. Issuing new shares to existing shareholders at a discount. Short-term borrowing. Answer. Money borrowed for 12 months or less. Undercapitalized. Answer. A business not raising enough capital when setting up. Unincorporated businesses. Answer. A business model in which there is no legal difference between the owners and the business. Unlimited liability. Answer. A legal status which means that business owners are liable for LL business debts. Business plan. Answer. A plan for the development of a business, giving details such as the products to be made, resources needed, and forecasts such as costs, revenues, and cash flow. Cash flow forecast. Answer. The prediction of all expected receipts and expenses of a business over a future time period which shows the expected cash balance at the end of each month. Cash inflows. Answer. The flow of money into a business. Powered by TCPDF, www.tcpdf.org. 2/2.